Hi everyone. So when was the last time that your mutual fund manager or whichever fund that you do SIP in, they called you up and said that boss, the markets have run up. Please book some profits or please stop giving us money. The answer is almost never. Please let me know in the comments. Okay. The point I'm trying to tell you is that it's very easy to enter the stock market, but very difficult to exit some of the stocks. Okay. So on this video, I'm going to systematically explain to you when you should be booking profits. Why is it that I have recently booked like approximately 1 CR of profits in the Indian stock market and rotated that capital into the US, right? So hopefully this short discussion will give you some clarity whether or not you should be selling some of your stocks right now in India, buying more in the US. What is it? Why is it? Very quick disclaimer, this is not buy and sell. Number 2 point is that I am an active investor. I encourage people to become active investor. Now, many people get pissed off at me that, hey, how dare you tell people to sell stocks? Stocks are like so pure that once you buy it, you should forever buy and hold. That is a stupid strategy. The entire goal of stock investing is rotating capital. If you don't get this, buy and forget is not going to work out. I can almost say that with certainty in the next 10 years. I'll help you understand the logic also. Okay. And I'll share some facts. Fact number 1, does Mr. Warren Buffett time the market? The short answer is yes, he does. In fact, up until now, he was sitting on his highest ever cash positions that he has ever had in his career. So is he trying to time the market? Yes. But do you believe that people should time the market? Most likely no. So intelligent investors time the market. So now comes that, okay, when should you be selling stocks and why is it that I decided to sell some of my Indian stocks? So very quickly, if you go and observe like last 5-6 months, I had been an aggressive buyer in the Indian stock market, right? So for example, I was successfully able to buy like a lot of this downward spiral that was happening. Okay. Recently, what you will see is that this rally has happened of roughly 11.5% on Indian markets. Okay. Now this is a parabolic rise. Now why parabolic rise? So if you just observe this is literally like a V-shaped recovery, right? Or like, yeah, so almost like a V-shaped recovery that is kind of happening. Okay. Now, this is the story about the Indian market. Let me just quickly tell you what's happening in the US market also, because you need to see investing from a global context. And there is a very strong relationship between Indian stock market and the US stock market. So let's observe something like QQQ, which is NASDAQ. And here what you would notice is that there was a bull run, right? From here to here, this entire phase. From October 2022 all the way till February of 2025. Since then, NASDAQ right now is trading at minus 21% from its peak. Okay. If you look at S&P 500, which is the broader US market index, till last day it was trading at minus 17. I ended up buying a lot of stocks in the US literally yesterday, right? Why? And I'm building a US stock specific investment community where the alpha that I've generated so far is around 14%, right? Now anyone can sign up for that, right? And you can see the performance of my portfolio in context of the market. Very, very important point. A lot of people say that, you know what, okay, you are trying to sell your course, this, that, by name. I perform and I earn. Anyone, literally anyone can sign up for my US stock investing community, right? Understand all the macros, see literally like what I have in my portfolio, make a buy and sell decision based on the knowledge that I'm giving. This is not a push that you buy and sell in the US or whatever, but common sense tells us that, see, if the market in the US has corrected by minus 21%, minus 17% from its top, and in India, it has recovered by 12%, plus 12%. And from the top, if you go back and study Nifty again, and let me pull up that chart. So here you will see that the total fall from the top, if you just consider this zone, right, this is roughly 7%. So Indian market minus 7%, US stock market minus 21%, minus 17%. So where do you think the alpha right now is? Okay, so in a way one could say that, hey, it is in the US, and therefore I decided to cut some of my positions in the Indian stock market, 1 CR worth of stock, and rotated that into US dollar or US market. Okay, so this is very simple. Now, very quick disclaimer that am I bearish on India? No. Do I still have money in the Indian stock markets? Yes. So wherever I see an arbitrage where I can easily make money, I will move to that market. Let me go stock specific also. So let's pick some of the biggest stocks. For example, if you consider, let's say Google, right? Now here is the performance of Google. So it is down 32% from its top. Now, does it mean that Google cannot fall by another 15%? I don't know. It very well can. But honestly, this is a major fall that has happened on Google. Anytime in history. For example, if you go to this phase, right? So this was around a 22% correction on Google. If you would have purchased it on this downward sloping curve, okay, how much money you could have potentially made. So let's say that you were able to time the middle of this curve, okay, so you would have at least made like 25-30% run up, okay, at least, that I'm saying. If you are able to time the bottom beautifully, then this return would have been approximately 40-50% in a single year. Okay, so the point is that right now Google looks really good. These are solid companies. These are not small cap companies that we are speaking about. Really good opportunities are there in the US market. In case you want to learn fundamentally about US stock investing, then I do run a community. I would highly encourage you to check it out. It comes with live classes and a bunch of other resources that will make you a much smarter investor. So that's one reason to sell. Number two reason to sell is that you are looking for portfolio rebalance. Now, what is the meaning of portfolio rebalance? So let's say that my India portfolio is like almost 90%, okay, 90%. So let's say that I have 10 CR of capital, 9 CR is in India, okay, and I have like 1 CR in the US. Now, if it is clear to me that, hey, you know what, India is a clear winner post this trade war that is happening, okay, so then it's fine, right? I mean, I can keep like 90% of my capital in India. It kind of makes sense. But what is the current trade war about? So there are 2-3 triggers, right, in the economy right now. So one is the US-China trade war, okay, trade war. The second key trigger is the growth, where the real growth in the world will happen from. For example, this growth is being driven by artificial intelligence, robotics. You have gene editing technology like CRISPR, etc. Right? So this is where the real growth in the world will be generated. This is very similar to 2009 to 2025 phase, where the US market outperformed the Indian market on USD terms. Okay, so if you convert everything into US dollar terms, US market had outperformed the Indian market from the phase 2009 to 2025. But if you go to the phase, something like 1999 to 2007, the Indian markets were outperforming the US market. Now, this is not a nationalism issue. Again, I'm trying to help you develop an investor's perspective. That there are periods when US market will perform better, and then there are periods when the Indian market will perform better or some other market will perform better. You as an investor need to figure out that, see boss, this trade war will get over at a certain time. So will India really benefit from it? The short answer is maybe. I don't know. Okay. The second is that where will the growth lever come from, right? So would it be from like China, US, or would it be more from India? So here I would give points to the US. Now, I'm not saying that you go and cut your entire India portfolio, or I'm doing the same. No, but you have to think about what percentage of money you want to put in India. Let's say 50% and 50% in the US. So I am also thinking of that split. Point 3 of selling your stocks is that you're over invested in an asset class. Now, for example, if you meet equity guys, they will say that, you know what, if you have 10 crores, put all that money in equity only and be done. Okay. Now this has proven to be a stupid strategy. Like, I mean, and the last 5-6 years proves this, right? For example, gold returns, if you see, it has outperformed equity. Now, am I a gold investor? No, but I have not bought gold. Fine, I missed that rally. But did I make money from real estate? Yes, please go and check my videos from 2022 onwards. I've purchased a lot of real estate. That's again a fixed supply asset. Did I make a lot of money on Bitcoin? Yes, I made a lot of money on Bitcoin. The reason to sell your equities in a market like this is very simple, that, hey, you are looking for asset class diversification. Now it's your Shraddha, how much gold you want to buy, how much Bitcoin you want to buy, how much land you want to buy, and all that stuff. Your call, right? But the point is that being 100% equity focused in such a multipolar world where there is so much volatility, that is not a very smart strategy. And that's, according to me, is the third reason for selling. My portfolio personally right now is I am around 60-65% stocks, right? Around 30% real estate, and 5 to 7% crypto, which is primarily or almost all of it is in Bitcoin, right? So these are like, this is how I'm splitting my portfolio, right? The fourth reasons for selling is that you are over invested on certain themes. For example, recently I cut some positions on HDFC Bank. Now, is HDFC Bank a bad bank? The short answer is absolutely not. I have been bullish about HDFC Bank. It's literally a free fokat ka money where you can make, right? And in the last few days, it has gone up like crazy, right? So it has gone up from its March low in the last 1 year. This is the return that HDFC Bank has generated. Now, I have invested crazy amount of money in Indian banks. I have been consistently making the point that almost 70% of my portfolio, Indian portfolio, is pure finance. most of it private banks. So as of today, you will see that how much money I have on HDFC. So you'll see that it's in crores, right? So I booked around like 10% profit on HDFC, created some free capital, let's say 15 lakhs, and I rotated that to the US, right? So this is what I'm doing. Why? Because for me, because I started out with, let's say 100 units of money on HDFC, now it grew to like 140, okay? So therefore, to balance my portfolio and keep my entire exposure to HDFC Bank around 5 to 6% of my portfolio, I had to sell some stocks. Okay, so this is the bottom line there. Now, next point comes that you sell your stocks because you have some critical expenditure that is coming, or you find like new opportunities. For example, let's say that you have to do your education, like an MBA fees bharni hai, and that you have no option but to sell some of your stocks. Perfect reason to sell. Okay. Other reason could be that, see, right now you're finding some really good opportunities in US tech, and you have already made very good money on Indian banks, private banks, depending on which level you bought. Okay. So then what are you trying to do? You are trying to do sector rotation. So on that note, you can consider rotating some money, right? So this is the another reason to sell in this type of a market. Now then the final reason to sell, and in fact there are multiple, but I'm just trying to condense this video a lot. So the final reason for me to sell in this type of a market would be that if you are structurally invested in bad companies, right? So now what are bad companies or bad industries? According to me, IT, right? So I exited all my positions on Indian IT. It's slowing down. It's set for disruption. I don't know how much time would it take for disruption. I was able to exit that on good profits. It's not as if that I made any losses on it, right? So if you feel that some industry is slowing down or there is just too much uncertainty on certain industry, then maybe it kind of makes sense to sell. Now, I'm not saying that I'll be right or wrong about like Indian IT. I might very well be wrong, but it's not as if that I will, for example, Indian IT goes from 100 rupees to 150 rupees. Oh, Akshat lost money. No, because I invested in US tech also. No, so it's not as if that Indian IT will go up, but US tech will go down. It can't happen, right? So it's very, very low probability of that happening. So you always think from that perspective. Now, if you're bullish on Indian hospitals or Indian manufacturing, whatever it is, you have to pick industries where you are considering them to be winners or losers and accordingly redesign your portfolio. So here is a summary that these are 5-6 reasons why I would be selling in this market. I hope you got the perspective why I sold some of my stocks in India and rotated that capital to the US. Thanks for watching. Subscribe to the channel and I'll see you soon.